Hey, this is Matt from InvestiQuant. Today is Monday, November 2nd, 2020. And today is the first trading day of the month for November. The markets are up a good amount this morning as we approach the open. We're trading just a little bit above Friday's high, actually. But we have a lot of range, good volume so far in the overnight session. I figured this morning we'd take a look at what has happened historically on the first trading day of the month when you gap up in a similar environment. So let's go ahead and set that up and discover. We will look at all four instruments here. Setup is going to be based upon entering the market at 9:30 a.m. Eastern Time and exiting at the close, 4:15 p.m. Eastern Time. It'll be set up as a long trade. For the opening filter, I'm going to use gapping up. We may be gapping up above the prior day high as we are currently trading just above it at the time of this recording, but I'm going to leave just gap up in here for now, and I would encourage you to dig into these different opening locations as we get closer to the open and we know exactly where we're going to be opening at. Right now, I'm not sure if we'll open above the high or not, but we are very likely to be gapping up, so I'm just going to stick with gap up here. Next, I'm going to go into the calendar section, and I am going to say it is the first trading day of the month. I got this over here on the active today section under unique days. We've got a bunch of unique days. In fact, we just added some new ones there that I can show you at another time. But we've got one here today, first trading day of the month. I have added that. And then I'm going to go into indicators and put us in a similar environment where we are below a 10-day simple moving average, but above a 200-day simple moving average. And that is all I need for this test. Now I can hit view results. And here we go. So these are the results of going long at the open, 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when you gap up on the first trading day of the month in a similar market environment, which I have described as below a 10-day simple moving average, but above a 200-day simple moving average. Historically, the S&P has 43 samples dating back to 2003 of this pattern. The NASDAQ, 43 samples as well. The Dow, 49 samples, and the Russell, 46 samples. And if we take a look at the win rates, notice the S&P is quite strong here in this environment. 67% of those have closed above the opening print. The NASDAQ, 56%, the Dow, 59%, and the Russell, 59%. So all of these have at least leaned to the long side and have a little bit of a skew to close above the open historically, with the S&P being the strongest of the four. None of them are weak, though. They are all favoring the long side there. If we take a look at average win, average loss, you can see the average loss is larger than the average win in the S&P by quite a bit. It's pretty similar in size for the NASDAQ, so both of those about the same amount. Average loss just a touch larger in the Dow than the average win, and then the average loss larger than the average win in the Russell. So 3 of the 4 of these instruments have a little bit larger average loss than average win, but all 4 of them have favored the long side historically when it comes to simple win rates here, which is just saying has it closed above the open or below the open, getting a green candlestick historically on this day. And the majority of them have finished with a green candlestick on this day. So hopefully you found that helpful. Good luck today, and we will see you next time.